Okay, so thanks everyone for joining me today. What I want to do today is dig in a bit more into this section. So this is my demo account. So what I'm going to do is, you guys know how to use the section, but I'm going to go a little more detailed. And this is where a lot of brokers are using this product right now, is just going into their database, and there's opportunities that will come and go. So as rates drop, rates increase, penalties shift. So we've been focusing a lot on the 2023 files and that sort of thing. And I mean, 3-year fixed, we've probably done a lot of those, but I'm going to use an example of like a 5-year fix because I'm finding a lot of brokers that did 5-year fix that were 5, 4, 4, 6%, 6.5. So I'm going to walk through this, and I'm just going to say Sydney Crosby. I'm going to create an account for Sydney. And you guys know how to do this, but I'm just going to go through and I'm going to say, I just want to look at this in a different perspective. Sydney's refinance exploration. So I would personalize this, of course, to Sydney. We're in Sydney's account, and from top down, you guys know how to do this, but I'm just going to keep going. I typically will, with my clients, I'll say new mortgage opportunity, and that's what I'll call this. And I'll show you why and a reason. Let's just use, and I'll show you in a second, but all this will filter down to your presentation down here. Okay. So let's just go top down, and let's just say this is with TD. It's a fixed. And what I would say is I would put here TD 5.44. Once again, as you see down here, it's going to begin to create your presentation. We pop back up and we keep going top down. Now, this is important with fixed rates, especially with the banks, is this is very important. So you put a 5-year here and you say this thing comes up for renewal in, say, 2029, and it comes up, let's just say January, which is, there's a pocket here, guys, that is going to be, if you want to go to your database and see there's anything there around this time, January 3rd, it automatically works out, of course, the months remaining in the term. The current rate is 5.44. Now, what's important about this here is that with the history of posted rates, this is as close as I can get it back then. This is what we think it is. And I mean, I keep track of all of the posted rates for the past couple of years. So as we continue moving on, the posted rates will be as accurate as freaking possible. Okay. So if we click on this, it goes back to 2023. If you put here 3 years, it'll go back to, of course, 2026. So just be cognizant of that. So as we go down, let's just hit this. We've got that. And let's just say this is 500 and the payments are 30.50. So in here, we've got IRD in 3 months. Now, if you're not aware of why I did 6 months of these penalties, is in some cases, you're going to hit a transition point. So in those transition points, you may find from like 37 to 36, the penalty either drops to being lower than 3 months of interest, or the penalty will shoot up. Okay. So each lender has a different transition point. If you want to be strategic, First National, if you go 2 years less one day, they will start using the 1 year posted. So if you went to all your First National deals and you looked at renewal dates and you said 2 years less a day, and you went in and kind of fooled around with it, maybe you find something there, guys. Okay. So in this case here too, what I've done is, and I had an email from a broker this morning saying, well, the penalty in here was 10.5, but on payout, it was 12.6. Well, I'll take this just a little bit deeper and show you guys an example of what can happen with these penalties. And actually, I won't do that because it'll show a whole bunch of personal information. So I won't go into that because I'm recording this. But what happens here is that the reinvestment rate 2 weeks ago with MCAP or RMG was 419. So they quote the penalty at 419, but then in the past couple of weeks, that reinvestment rate dropped to 409. So now the penalty popped up. So you've got to be cognizant of these things. And what in here, I had a broker back east and said, well, I'm getting my butt kicked on these things. I need to show the client Well, if they wait, what can happen to the penalty if the rates drop? Because a lot of the clients were saying, well, I'm just going to wait for rates to drop and then I'll do it then. So in here, I added this, and I don't know if you guys have looked at it, but this is a posted rate. So it shows you kind of the current posted rate that's being compared to. But say if TD drops, which they did, remember they dropped like a point, and all the penalties went like this. So in here, I've allowed this to be 0.2%. So they drop it down. You can see what happens with the penalties, the IRDs. So in this here is a visual where you say, well, look, if we wait, the the trend is that these posted rates could drop. Okay. I believe in our industry that we need more tools that were more strategic. If it's all about rate, conversion is going to be less and less all the time. So in here, you can use this and even vice versa. So I added that in there. So use it, guys, with clients. Now, when we get down here, we've added the penalty on. We've got 861, but what are we going to do with this? I'm going to make a proposal that we send this over to Scotiabank, use IFP, because if we use legal fees up top, it's going to factor in here. So I'm going to go in here and I'm going to go Scotiabank. Now, my delivery is what I'm going to get into now. Let's just go 3-year fixed and let's go 414. This doesn't do anything, but you can always make reference. Okay, great. We now have a savings. So here's what I would do, and you guys would um, focus on this based on what you think your client needs. Okay. So what I've been doing is when I get a client to a call, now it's my time to present and be strategic. So I would pop in here and I added this a little while ago. Let's go match payments. Okay. Now I'm going to go to here and this actually, a client helped me with this. 24 years, 9 months is the current AM. If we drop or we match payments and we use 414, that AM drops to 20 years, 11 months. Now, I was presenting to a client back when the 399 popped out, and I showed him the match payments, and I'm like, oh, the payments don't drop. And he goes, well, Russ, wait a minute, I see this, and he actually told me about it. And this it dropped from 28 to 22, and he goes, well, Russ, I mean, if it ends up that we keep the payments the same and it shaves off, I mean, this is over the life of the mortgage, of course, guys, not over the next term. But if it shaves off that much time, I'd like to match payments. But during my presentation is I presented to him in match payments. And then when I presented to him, I just went up here, I went edit, and this is all ready to go. I can type, and I duplicated this. And I gave him another option. And I said, lower payment. And I went down here, I don't want to, don't duplicate this stuff. I don't want double duplicate entry. Is I now went like this. I unclick this, change this to 424. We all have status, I'm going to say. And this is 30. And we pop over here and 0. So in this case here, I mean, his pain point may be lower payments, but we have to let him know that if you lower your payments, you're going to have more savings here. This is going to be higher, but you're still going to make back the penalty. So in these cases, you're trying to find the pain. That's the whole point of the call. The last one, what I would do if that's, is I look at the variable. And I would end up going like this. Now this becomes more strategic. So when I talk to clients about this, I would head down here and then I would end up going like this. I mean, I would say update Scotia ARM. We want to update this 4.45. And this can be negative 0.5 if we go, of course, amortization of 25. So in here, what we've done now is this is looking super sexy now. Of course, you can see 6,800 and so forth. But we got to be careful with this. Now I'm going to add in the prime rate forecast. And I've kind of noted, and if you guys have not adjusted your forecast, you can go in here and edit it and so forth. I've factored in December no cut, January no cut, March cut, and it stays the same. And then we see a bump up in January. Now, I don't want to play God with the prime rate, but in this case here, of course, it's showing a pretty good savings, but it's really important to discuss with the client that, look, I can't predict prime rate. I can predict prime rate. I mean, I can show you what we think, and you can go on trading economics and see the forecast. Just be careful with that, guys, because if it looks super sexy or super great, just be careful of what you're advising the clients. But what I would talk about in this case here is I talk about the prime rate, but I'd also note that this is more strategic, is that if you feel the prime rate's going to fall and the rates are going to fall, we can look at the variable and then we can lock in down the road. Maybe you lock in at 3.5, 3.7. But this one here, this opportunity with the variable is more risque, but it's something that you can look at. Now, in the schedule, you can also now see is, you can show them that with an ARM, adjustable rate mortgage, of course, as the rates drop, payments drop, AM stays the same. Now, if this was a VRM, it would be the opposite. Rate drop, payments stay the same, and then the amortization will drop. Now, I have one business upon renewal when I've talked about ARM and VRM, depending on whether the rates are going down or going up. So be strategic in everything that you do in your presentation. So in here, if you're going to present this, you get a feel for your clients. There's going to be some people out there like, I mean, you see the savings is, excuse me, 1736. Well, even if that was negative 500, I had one a little while ago. I just made a call or I sent a video off and it dropped their payments by $1,006. I sent a video and it said, look, we're going to be, you're 11 months out. I'm trying to target all the ones that are 11 to 12 months out because I don't want to compete with the renewal. So I'm just trying to get those ones at this point. So I said, we can drop your payments by 1,006, but you're going to lose about 4,500. You know what? It's a $1.2 million mortgage. I'll give you a $2,500 cash back. The commission's 15, 16,000. So it only was a negative of 2,500. He said, well, my wife has gone on mat leave. We could use lower payments. So you never know until you reach out, until you send something to them, even a video saying, and it was more so me not trying to be um, a total salesman. It's me trying to be an educator saying, I just want to send you a video. If there's any validity of any of this helping you, let me know. We can restructure or we can restructure a mortgage or even just hop on a call and discuss further. So I've built out a plan for you that is either match payment, lower payment, or a VRM option. So that's what I've been doing with these calls is just going through. But if you send one option, and I started fooling around with this, I'm like, do three because what people want is they either want to pay down their mortgage, they either want to lower their payment, or they want to kind of play the market a little bit. The two ones here, match payment, lower payment, you got to feel it out with your clients. And if you look at their previous, application form, if they're more prone to, have debt and that sort of thing, I mean, reach out and see. So that's the first part of this. Any questions or comments or anything like that on this?
I didn't know you could do all that in this section.
And guys, this is why I'm going to start these tutorials are going to keep coming because I've had people say to me, they're like, well, how do I use it? So every 1 to 2 to 3 weeks, I'll be covering each section and how I'm using it.
Yeah,
And then
that's really
to give
good.
you guys insights. So I'll be kind of poking through. And if you guys are having pain points, you send me an email, or that's what these calls are for, or to just collaborate on. Now, a lot of the time I'm apprehensive in my first demo calls with and with brokers and like with subscribers because what happens here is it's just too much all at once. So I'm going to show you something else too right now.
Because
Yeah, go ahead.
sorry to
Sorry.
interrupt, Russ. Sorry to interrupt. I used to just kind of go down to the mortgage scenario and do that, right? So 3-year fixed, 5-year fixed, 5-year variable, and do it that way. I like this better.
Do the duplicate because then it's guys. I mean, we all want to do less. I mean, if we're on a call with someone, we don't want to be screwing around on their typing and stuff, right?
Yeah, yeah.
So as you navigate through it, you've got to get whether you practice in the mirror or whatever you end up doing. I mean, when I do this, I'm talking to the clients based on transparency. Transparency sells in today's market. So what I'm going to do is, I mean, in here too, you guys know that when you connect with a client that may need lower payments, sometimes they're more privy to having the need to pay out some debts. You do know that, and I hope, in here, Let's say they have a credit card, and I'm going to say RBC Visa, 19.99. You can ad hoc add it on just instantaneously. And then what you can do is it now creates, well, now we've got a savings in there, right? So all this stuff is just showing them. And so you know is that this here, 37 months, 624 times 37 plus this will equate to this. I want the client to know if you lower your payments, you're losing out on this. Some brokers out there I've seen is we can save you 20,000 in interest. But what they're not saying is you're, and lower your payments, but your interest or sorry, your outstanding balance is going to be 30,000 more in 3 years. I want transparency. Now, just to give you a heads up, is if this is an ARM and payments change with the rate changes, it is factoring it in the background. Okay. So it's doing all the calcs in there in the background. Now, I'll take this one more level. Okay. So all this interest is being calculated in there if they didn't, if they kept it and so forth. But I was doing a presentation one day and I put auto loan in here. And this is a Scotiabank product. I'm just saying we're going to take it over to Scotiabank. Okay. So I'm going to say Tesla loan. Let's just say it's 46,000 and this is, I don't know, 6.49 and these payments are 649. So it works out the AM, everything in there. And of course, right, it's everything's looking good. But a lot of brokers, or sorry, clients, or not a lot of clients, but clients have said, well, I don't want to pay that thing off over the next 25 years and pay the interest. So in this case here, what you could do, and why I've created this, is you can do three components. So I'm going to go like this. And now what I'm going to do is I'm going to go like this. And I'm going to transfer this over here. I don't want duplicate entry, so I'm going to take it out of here. Mhm. So now we've got step one, step two, and you could create a step three if you wanted to. Most often we're only doing two steps. If you head down here, now you've got step two in the after. So now maybe in this one here, excuse me, maybe you do a 3-year fixed, 414, maybe AM that over 5 or match the AM 7 or 6, whatever you want to do. And then what you can do is show this. You paid off a little bit quicker. See how that balance went down? So you could present this in a way where it's like new mortgage and segment it. Now, say if there's something in here, I mean, we've got to the point where it makes sense to do this. And they say we want to draw an extra 50,000 out. Be cognizant of this is that if you end up going up here and you say 50,000 and you say ETO, it's going to kill all the numbers because it's not something that they have today. Okay. So if you're going to do that, I would probably use this section only and just say, here's a new breakdown of your mortgage before and after. So just be cognizant of that. Now, excuse me, in here is this one here is anything you want to add extra. So if I go add item to refinance, we got two in there now, is I would say legal fees, appraisal and legal fees. If for some reason you don't use IFP, legal and appraisal fees. And 2250, let's just say. You can include it, take it out, whatever you want to do. Now what happens is you see it drops the savings down. However, it fully discloses the whole breakdown of the mortgage. Okay? So that there is taking step one, step two, and looking at your delivery. Now, where we're finding in the last part of delivery is going to be, I don't know if you guys have this or not, but in here, I mean, three ways to do this. You could reach out with a letter and add a video to this and say, hey, it's Glenn, Joe, Tony. I'm, I wanted to just give you a heads up that, I mean, you focus on whatever you think is going to be powerful for that client. If you think lower payments are there, then you focus on, hey, we can drop your payments by 413 a month. Would that help you? Please call me and let's look at this. If you think they want to pay down their mortgage quicker, you can even put two options in there. We can drop your AM from 25 to 22 and make back your penalty. We can take your payments and drop them by $569 and make back your penalty. The delivery is extremely important. I would do it by way of email with a letter, and I made this for you guys is that it depends on your style of sales or educating is I put different kind of personality types in here. Whatever you feel is good. And I'll forward this out to you in a follow-up email if you don't have it already. And then you can adjust this, copy and paste the guys, throw it in AI, but what is going to get them to the call so you can have a meeting and present? So where I've had the most success is I'll send this out and I'll put a loom in there. I'll record and just say, hey, is there any validity in doing this? If there is, please give me a call. I'm managing this for you. Um, and then you hear from me, maybe you don't. Next, we move on and we just, because you're going to have clients over the years. This is always going to be, the refi may start to die off a bit, but then rates drop or the rates go up. Like someone calls you and says, well, I've got to restructure my mortgage because of this. At least you can build it out for them. So that's all I wanted to kind of go through with you guys today is just the little details inside this here. This one was kind of the most work out of all of them because you're kind of like, well, if I do this, we do this, and what happens here and here. So this is all strategic in the delivery. So you guys use it how you feel, but I wanted to kind of dial in greater detail on this stuff on where you sit. You can, even if this is negative $400, but the payments are $500 less a month, is it still worth it to reach out? I don't know. You guys would have to make sure you feel good about that. I've had some brokers say, no, I'm not. I'm like, well, you never know unless you try. It's not, predatory. What it is just adding value. Okay. So guys, that's all I want to cover. Do you have any questions or anything you want me to run through or anything, any examples of what I've talked about here? You want me to show anything or just dig in a little bit deeper?
I have a question, Russ. In the bottom where it says mortgage product options, when do you use that?
Okay, so in certain cases where if someone says to me, and hi, Christine, is if someone says to me, well, show me side by side fixed variable and maybe I don't know, Manulife or something like that, different products. Now, this is at the bottom of each strategy session because I think the natural flow of going through a scenario with a client starts at the top and ends up with your delivery or your presentation or your offer. So in here, what I would do is maybe they say, well, give me some more options. Okay, 5-year, 3-year fixed, and let's end up going, auto populate. So it'll just so you know, if you hit auto populate, it'll pop in there. Then I would pop over here and say, okay, well, let's dig into this a little bit deeper and let's go Scotiabank variable. And you can kind of talk about it in more detail. And this is, I mean, sometimes I need this, sometimes I don't. And now you can start kind of focusing side by side. And then, for instance, maybe we're competing against RBC. And for the love of God, guys, I don't know what I mean, let's just say it's 404. And we've got 20 years, 11 months. Let's go 25. Let's just go 25 across the board. Let's make sure we're apples to apples. You got to be careful here is that why I copy and duplicate is if you created a new 5-year, this ends up being 5 years. It skews these things. So keep in mind what controls the calculations is this right here. So, Christine, the answer to your question is if I'm getting to the point where I want to dial into this stuff and show the difference. 1615 is the difference between 414 and 404. However, your prepayment privileges here are 10%. Over here, they're 15, and if you request 20, you can get that with Scotiabank. And I've also put in here flexibility rating. And while I've done flexibility rating versus bashing the banks, because we deal with the banks, I don't want to tell a client that the penalty is going to be higher later, and it may not be, guys. So I put flexibility ratings on here. And I've made a note that any banks are lack of flexibility. So it's the same over here as well. But in these cases, you can start to begin to break down the products. Like I spoke with a doctor last night. He comes up for renewal with Scotiabank. TD, sorry. It's like 1.2 million. RBC offered like 3.94 on the renewal. And I mean, I can get down to 399, 404 probably with Manulife if it's a bigger deal, or maybe see if I can even get closer. But when I started talking about penalties and the lack of flexibility, he's like, that makes sense. So now we're still continuing the conversation, guys, but there's no guarantees. But I said to him that, Manulife is their reinvestment rates. If you exit this thing, 4 years into 5 years, the chances are going to be much better. The penalty is going to be less with a Manulife penalty calculation versus a bank. So we're still continuing the conversation. At least I've got past the first meeting. But Christine, if someone wanted to break this down further, then what you can do here is just look at this side by side. And I mean, sometimes all it takes is 404 and 404, sorry, 414 and 404 to say it's only 1,615 bucks over 3 years. Does it make more sense to take the better, and have me manage this thing for you? So that's where I would use that, Christine, if it's needed. Now, I also sent out when in this, I'm just going to talk about this briefly too, is I mean, in these cases, I mean this penalty, like I sent a video out a little while ago. If you haven't seen it, I did a restructure, a refi for like 1.3 million. When the clients came to see me, it was perfect time because we went into it was a 399 Scotiabank, and it was a referral from a financial planner, but the mortgage was like 1,555. And as I coached them through, they had cash and they're going to pay down the mortgage. I said, and you can be strategic like this, guys, but there's a bit of risk involved. I was fully transparent with them. They're going to pay down the mortgage anyway. So I said, look, at your earliest convenience, take the cash out you're going to pay and hit it on the mortgage. So they put 250 down or whatever ended up being in that video, and it dropped the penalty by 6,000. So the IRD went from 31, 29 or 30,000 down to 22 or something like that. But I was very transparent that in my discussion with them, that it was, look, this can be really good or it may not. Because sometimes lenders will say, well, if you pay it out through expired completion, we're not going to freaking, you're paying the full pop, right? So in that case, you can be strategic if they have a TD mortgage and a flex line already. If you're feeling pretty solid about it, you can always make a lump sum payment to maybe drop this by 2, 3,000. But you got to dial it in and make sure there's transparency because they'll get that money back, of course. You just got to be careful with that. Okay. I did it in that case because they're going to pay off the mortgage anyway and they have the cash. So when we have a funnel of leads and opportunities, we want to take that funnel and do whatever we can strategically to get it to the finish line. And that's what it's going to take for us brokers these days, other than just rate. It's going to take a little more thought. It's going to take a little more work to get these freaking deals done. So that one there, if you haven't seen it, go on YouTube and have a look at that. But that's a bit risky per se. If they had the cash, like if they use a line of credit, they could do that, right? Just be careful with that, guys. You understand how penalties can change and stuff, right? But if the clients are on board, go for it. So, Christine, I hope that answered your question. That was a long answer. I apologize. Okay. Anything else, guys? Anything you want to kind of collaborate on or anything, any files that you want to talk about or any delivery questions, anything like that?
Mhm.
Yeah.
Like,
Oh, go ahead, Tony. Go ahead, Tony.
and I've got a couple of clients that I'm actually doing renewals with now. So I just simply want to show them, I guess, the offer they're getting from their current lender and then show them, they want to see, two options. Do I just use the mortgage renewal transfer?
Yeah, so
And
here's what I
I can do the three options in there and show them the differences and
totally, yeah. So here's what I'm doing. So next year we like my team and I, how busy we were back in 21, 22, we have like 180 renewals coming up next year. Each one of those, my colleague Maria is reaching out to you and scheduling a meeting. And I'm shooting for 30 to 40% retention on that. But if we just deal with rate, our retention is going to be 10%. So, Tony, if you look at this here, every file in here is going to be, if we go to strategy sessions, and I'll go to an example, okay? And I am trying to find any pain I can solve for these clients that I possibly can in order to get them out of there, have rate plus purpose. So these are two examples of conversions I did last year. So I would get a client on the phone or in a Zoom call, and I would start out saying, how are you? How's everything going? I just want to run through a needs analysis with you today. And what we're going to do is I just want to see if there's anything I can do to help place you in a better spot. I mean, rate, if you can do that, great. But if there's another reason, even better why they're going to work with you. So in here, each one of these questions, if I run through this, is I'm creating AI right now, guys, which will answer all these questions for you and give you tips. That's coming probably Q1, Q2 next year. I'm teaching AI to, if you fill this out, it'll spit out a whole thing to say, here's how to convert this file, the best tips possible. So this one here, Tony, I did a quick call with him and I'd asked him an update on questions. So what's the value of the property? And each one of these has a purpose. So I'll go through it quickly just in a matter of time because you guys are gonna understand this. Value of the property is under a million. Insurable financing is possible. Insurable rate pricing. 414, good. 65% loan to value, we can get the best rates on the insurable. This is not a home line. They don't have a HELOC. Perfect. If they need a reason to have a HELOC, it allows me to get them away from this lender. Okay. This is not a home line, so RBC offer. This is with RBC. They currently have 283. I'm thinking to myself, payment shock. Maybe. Renewal date. So I funded this back in November. Um, August. So 3-year fix, 407. Like these are all the rates that they were offered. How would you rate your current lender? If they don't have this, I would ask them to go back and ask for your most competitive offer and bring it back to me. I'm trying to vet this bloody thing before anything I do in an application. I'm not even touching an application at this point. I'm not, no point. So I always go strategy session, application, proposal. If there's a reason to waste all my time to do an application, if there's nothing, no meat on the bones, I'm not doing an application. So in here, how would you rate your current lender? If it's bad, good, I would make sure that I'd be cognizant of that and reassure them it's not going to happen with me. Any plans to renovate? No, but if they do, they need that HELOC or an ETO. So I'm trying to find a reason for to solve problems. No other debt, but if they did have debt, it's turning into a refi, right? Mortgage payments, okay, not too concerned. Payment shock, but if they turn into a rental property and need lower payments. Right there, I'm focusing on if you happen to move, maybe it's best we do a 30-year AM because they want to keep that property as a rental in the future and buy another one. So now I'm focusing on payments. Maybe we restructure, and down here is they want to buy a rental property or keep this one as a rental, and they're planning to move. So these are all the notes I made, and I'll show you how it sums it up here. Considering buying a rental, but not sure yet. Maybe considering move, but still considering POCO. So I made notes down here. I'll even ask questions on do you have any non-reg? If they have non-reg, maybe there's a debt swap. Maybe. Remember, the funnel comes down. We're trying to do everything we possibly can to have purpose. So why I feel I got this deal was the rate was close or matched. I lowered the payments for cash flow if they keep it as a rental. And I added a HELOC if they go buy another property they didn't have as much cash, they don't want to draw out investments. So I added a HELOC on that they could use. So this is where I feel the industry is going. And Tony, yes, at the bottom of that, once you have that proposal, then you can start, delivering, and you could skip all of that if you want. But down here, yes, the answer to your question is you can compare these side by side and talk about them. That's where you use your knowledge after so many years is to find to talk about strategy, talk about, everything that you want to present to these people. You know them better than I do. So, but that's how I would run through every renewal. And a lot of the time, there's nothing we can do, but at least I've vetted it. I mean, but like out of 10, we're converting on average 3 to 4 because we're finding some pain to solve.
Yep.
But I'm asking the question. So, guys, this was another call I'm going to do. I'll dig into that more another call, and I'll show you examples. But Tony, hopefully that answers your question and that. But that's this section. Glenn, sorry, did you have a comment or a question?
Um, I did, and on the home refi,
Yes.
and you have the three scenarios, pardon me, side by side. Um, what was my question now? I can't remember, Russ. It's
No
okay.
worries. You know
It's
what it
okay.
is.
I'll shoot a message if I need anything.
Yeah, sounds good. And
Yeah.
you guys are free. You have my schedule. The training is I'm gonna keep doing this like every 1 to 2 to 3 weeks. What I don't want to do is become stagnant. I don't want to be telling you guys things that, where you come on for 30 to 45 minutes. I want you to learn something. So I'll try to find strategic things, or you let me know if you want me to talk about something, but I'll show you how I'm using it in my business. Okay. And that sort of
Oh,
thing.
sorry. I
Okay.
know, Russ.
Yes.
You had just mentioned that you do this before any application. So your steps are this application proposal.
Yes.
What data are you collecting um, from a phone call or the email? Are you just getting their mortgage statement and then kind of playing into this? Is that it?
Yeah. So what I'll do is if we're going to set up a refi call,
Yeah.
then what I'll do is I know kind of roughly what Sydney's mortgage is at if I have the current mortgage statement.
Right.
So if they're going to book a call with you, then what I would do is at that point, could you please send me your most recent mortgage
Yeah.
statement?
Okay.
Okay. And
Mhm.
then, like I said, I mean, with my team and I, like the volume and the efficiency of files is I used to do application like here,
Mhm.
but what I'm finding is more efficient is I go strategy session.
Mhm.
If there's no meat here, I'm not going to application
Yeah.
and collecting all the CRA docs and wasting my team's time
Yeah.
is I do the first call or the first meeting. I mean, home purchase, I'll cover another one, like
Mhm.
is I'll do that to see if there's any validity. And then at that point, once we have purpose, we
Yeah.
have a reason to move forward, then I'll say, because then it's more, I mean, who wants to fill out an application form for the sake of doing it? It kind of sucks. I don't want to ask him for like that stuff and then come back and say, oh, sorry, we can't do anything for you. It doesn't make sense. I want to find
Yeah.
out here and then say, let's see if we can get you approved, right? It saves more time. And at least you know what to underwrite, right? So
Yeah.
once you have this built out, the mortgage for Sydney he needs is 600 or 515 or whatever it ends up being. You can go back to this, right? And that's the same on the home purchase,
Yeah.
right?
I'm going to add one more kind of maybe a higher level question to this.
Sure.
Are you Finmo or Velocity?
Um, I am I'm currently in Hurricane, which is I
Oh,
was
okay.
okay, but every company has their flavor.
Yeah. Can can
Now,
can can this information be zapped into Finmo for instance?
you
Like
could if you wanted to create a Zap. Now,
that's
but
what I
the
was
thing
going to
is,
ask. Just
I
just for reference, because if I don't have an application yet, but I'm working with someone, can I just like as I build out their contact info, name, email, can that be zapped into Finmo just and have a placeholder?
theoretically, if you have, in here, if you have Sydney's first name, last name, email address, you could zap it
Okay.
100%. You could figure
Yeah.
that out.
I just
But
thought about that off the cuff.
I, part of me is, I mean, if you're doing like 30 deals a month,
Yeah.
I mean, I've been asked people asking me about, well, zapping from here to here. Well, I purposely built this so that all you need is first name, last name, email address, and you're done. So if you go spend $500 to create a zap, all it's going to do is when you go back to here and you create a strategy session,
Hmm.
and I say, Sydney, Sydney's going to be there. Click. But keep in mind too is that we've created an account for Sydney right here. don't keep on creating strategy sessions for Sydney. Go back to his account
Yeah.
because then you have everything in here over the
Yeah.
years. You may do this and this, and it's kind of neat. Like I've been using this for 2, 3 years, and I go back and I remember the home purchase, and I can say, oh, by the way, and I'm changing the structure of my calls where I'm like, this is software I'm using, and this is how we're going to manage your mortgage over the years. These are all the reasons you come see me. So, but with the Zap, I'm not finding a huge benefit to
Okay.
that right now to spend $500 on a Zap. I'd rather just, I mean, a lot of this too is on demand.
Yeah.
Not all your clients, I mean, you've got to have a starting point. I think CRM is a starting point.
Yeah.
And then if you create something in the CRM, it zaps to Finmo, it
Yeah.
zaps to TMS, and then it
Yeah.
zaps to,
I was just trying to figure out a way because if I take an initial call from someone who's not in my circle, right? They just reach out and I just want to start maybe get them into here. Like I say, plan this first, then do the proposal down the road, take the app and do the proposal, but at least get them into my circle and then get
yeah.
them into my drip. So I just thought, oh, maybe this is a mechanism I can do that.
I mean, here's the thing is lead comes in, and this is a whole other phone call,
I know, yeah,
but
yeah, for sure.
lead comes in. I mean, I use Zoho. Because this is a
Yeah.
Okay.
recorded call,
Yeah.
um, I don't want to put like just clients' names in there and stuff, but
Yeah, yeah.
the lead is created. Okay. It always starts in the CRM. So now you're dripping, right?
Okay. Yeah.
So I have a lead drip. As soon as it's a lead, 7 days later, here's about Russ and his team.
Mhm.
14 days later, like I drip those.
Yeah.
But it's almost like you get a call. Where does it go first? It always should go in the CRM because you may not be doing an application yet.
Yeah. Yeah. Yeah, for sure. Okay.
So,
Yeah.
what I'm going to do is I'm going to stop the recording
Hmm.
and then